Welcome back to the channel, guys. This is Van, and in today's video, it's going to be shorter than usual. I'm just going to cover just a few things. First of all, it's been a wild and crazy past couple of days in the stock market. If you were a trader or speculator, if you were an investor, you didn't sweat it at all. This is just part of the game. Let me show you what I mean. At the end of last week, my portfolio was at 151,000. At the end of yesterday, it dropped to $147,000. That is what, a $4,000 dip. Not even sweating it. Not even sweating it because I am a long-term investor. I'm not a trader and I'm not a speculator. I am investing for the long run. But if you are a new investor and you were listening to the news, you would think that the sky was falling. Oh, the stock market was down 3 or 4%. It's the worst couple of days in stock market since what, April of something year. You would think the sky was falling and that we were heading towards a recession. Not true. In fact, I wouldn't even call this a dip. In fact, I would call this a speed bump. This is what it really is, just a speed bump. But look at where my portfolio is now. It's back to nearly where it was last week. It's at 150,000. Yesterday, it was at 147,000. It just comes to show you, if you are investing for the long term, these little bumps in the road, you shouldn't worry about it at all. In fact, you should see this as an opportunity to buy stocks that are on sale. Now, you may be wondering, what caused this little bump in the road? Well, let me show you what happened. There was an economic event, an index or economic indicator that did not go according to plan. It was the manufacturing index. The consensus was that it's going to be around 50.2. It was actually lower, 47.8. It just means that manufacturing in general was a little bit slower than expected. That's basically what it is. What this did was that it added more fear into the belief that a recession is around the corner. Is it or is it not? I don't know. But basically, it just added a little bit more fear of a possibility of a recession. Now, I want to prepare you for the next day, which is this Friday, unless you are watching this on October 4th. There's another economic index that's coming out, or economic indicator that's coming out that will affect the stock market, and that is the unemployment rate. If the actual unemployment rate is lower than 3.7, the stock market would rise. How much? I don't know. Now, if the unemployment rate is higher than 3.7, then expect another dip in the market like we've seen the past couple of days. It could be anywhere between 1%, it could be up to 3 or 4%. We don't know exactly how the market will respond. But this is just a bump in the road if you are a long-term investor. There's another economic event that is going to happen in a couple of weeks that I believe can have an effect in the stock market in the long run, and that happens on October 31st, the Brexit deal. What will happen? I don't know, but I think it's something that we all should keep in the back of our minds. Okay, so let's move away from this and let me show you something here. Now, I want to show you a tool that TD Ameritrade provides that I believe is a valuable tool. And you'll find it here in my account under balance. And right here, it's called the income estimator. This is a valuable tool because you can use it to forecast your dividend payments. For example, let's punch in a stock here. Let's say you wanted to buy AT&T. The automatic pop up 100 shares. So if you bought 100 shares, you'll spend about a little over $3,700. You'll earn $204 a year in dividend, which comes out to be about $17 a month. But let's add a few more scenarios. Let's say you're interested in buying 3M, and let's say AbbVie. Okay, B. So if you bought 100 shares each, you will spend about $34,000. You earn $1,636 a year, which comes up to about $100 a month. But let's say you're a new investor. You don't have $34,000. Let's say you start with $500. Let's punch in a few scenarios here. Let's say you bought 3 shares here, 1 share there, say 3 shares there, and right there, that's $500, a little bit on $500. You can buy a few other shares if you want. So spending $488, you get 3 shares of AbbVie, 3 shares of AT&T, and 1 share of 3M. That will pay you almost $25 a year, or a little over $2 a month. So you can see the possibility here. You can mix and match. And let's say you wanted to buy all AbbVie. Let's see. Oops, 6 shares. That's a bit too much. That is a bit too much. Let's say you want to buy 5 shares. That's still a bit much. $500. There you go. Under $500, you can buy 4 shares of AbbVie. You earn a little over $17 a year, or $1.43 a month. That's one scenario. Another scenario, let's say instead of AbbVie, you wanted to spend all $500 on AT&T. That probably should earn you about, so now you buy 5 shares. No, I think you buy maybe 7 shares. Let's see, 8 shares. Nope, 7 shares. At 7 shares, $500, you can buy 7 shares. You'll earn $14.28, or $1.19 a year. So you can see all the possibility here. You could run all types of scenario. So let's pretend that you look at these 3 stocks here. Fundamentally, they're all the same. In your opinion, you think that they're going to be around for years and years to come, and you want to own any or all of 3 of them. You can just run all type of scenarios here, however you want. So that way you can decide how many shares each you want to buy, or if you want to invest all $500 or all of your funds into 1 share, or you want to use all your money and focus all on 1 stock. That's entirely up to you. You can do whatever you want. Personally, it's my favorite tool, but it's not my only tool to help me decide how many and which stocks to buy. But you might be asking, but Van, I don't have TD Ameritrade. What else can I do? Here's another option for those who don't have TD Ameritrade and do not have the patience to punch in those numbers on pen and paper. You can go to dividend.com, go to Tools, Dividend Assistant, and this will come up right here. Now you will have to sign up. It is free, and just like TD Ameritrade Income Estimator, you can punch in your stocks, you can punch in your shares, and it'll give you an estimate of how much dividends a month you will be getting paid and how much per year you are projected to have. So in this hypothetical scenario, you have 300 shares of AT&T, 235 shares of Coca-Cola, 205 shares of Verizon, 80 shares of Johnson & Johnson, and 35 shares of Apple. Now, they don't show you the total cost of this portfolio, but at least it'll give you scenarios here. Your next month in November, you'll be paid $281 in dividend. The next 3 months, you'll average $494. In the next 6 months, you'll average $990. And between now and next year, or 12-month projection, you're predicted to earn almost $2,000. So this can be helpful. And here's the chart. Shows you the chart of when you'll be getting paid. Now, again, this is just a tool. This is just a tool. So guys, thanks for watching the video. I hope you find this informative. And remember, whether you're using dividends.com projected dividend income tool or TD Ameritrade estimated income, just remember that these are just tools for you to use. This should not be your main factor in deciding whether or not you buy a certain stock. So make sure you do your research, and I hope these tools will help you make better decisions. Thanks for visiting the channel, and I'll see you next time.